Ondas Holdings, trading under ticker symbol ONDS on the NASDAQ, is currently priced at $7.65 per share during active intraday market hours, experiencing a minor downward slip of about 0.54% in midday trading activity. While the immediate intraday ticker movement shows standard consolidation, the underlying order flow reveals a massive institutional accumulation pattern that completely contradicts the flat trading range seen on standard retail screens. What the broader market is completely missing right now is the sudden surge in institutional block trades following the company's blockbuster $875 million acquisition of DZYNE Technologies. This transaction essentially flips Ondas from a niche commercial communications provider into a formidable autonomous defense contractor practically overnight. If you look at standard investment discussions, the average retail sentiment focuses heavily on historical small-cap tech volatility or past dilution risks, missing the major scale expansion taking place. The expectation across the retail space is that Ondas remains a speculative, low-revenue play trying to sell hardware to railroads and industrial sites. The reality is that the company just weaponized its balance sheet to swallow an EBITDA-positive defense technology company that is on track to pull in nearly $200 million in revenue this year alone. This massive strategic shift completely rewires the fundamental valuation models for the stock, catching short sellers off guard. Over the past 3 sessions, trading volumes have expanded dramatically, averaging over 65 million shares daily, which is a massive deviation from its historic baseline. This volume explosion signifies that major funds are actively repositioning themselves, moving capital out of speculative tech and absorbing shares of Ondas as a direct play on domestic defense industrialization. When individuals search for investment help or look through popular investing sites to pick long-term winners, they often overlook these sudden micro-cap transformations until the price has already doubled. Looking closely at recent stock movement, the institutional backdrop is fascinating. Major institutional clearinghouses and proprietary desks have been ramping up their long positions, especially through sophisticated programmatic execution. We are seeing a distinct transfer of equity from impatient retail hands into concentrated institutional portfolios. This activity has created a strong support floor right around the $7.20 mark. The massive scale expansion also changes how the stock is treated within systematic index funds. As the market capitalization hovers around the $4 billion mark, it triggers automatic inclusion considerations for major small-cap benchmarks, which will force passive asset managers to buy millions of shares regardless of daily news cycles. Think about how major names behave. When an Nvidia stock or an Apple stock moves, it drives massive sector trends, but when a small-cap defense player undergoes a structural metamorphosis, the price action happens quietly in the block trades before exploding on retail platforms. This institutional velocity is heavily tied to the shifting macroeconomic reality of defense spending. Global tensions and the urgent need for domestic supply chain security are driving unprecedented capital inflows into defense technology. Investors using a standard individual brokerage or browsing through popular software like the Robinhood app are beginning to see the sector shift in real time. Private venture funding for defense tech surpassed $19 billion in the first half of this year alone, which shows the absolute wall of money chasing companies that can build autonomous systems at scale. By pulling off the DZYNE acquisition, Ondas has effectively bypassed years of organic product testing and customer acquisition, instantly capturing multi-million-dollar defense contracts and deep relationships across the military community. This is exactly why analysts across firms like Stifel and H.C. Wainwright have maintained aggressive buy ratings with price targets stretching well into the double digits. To understand the full scope of this business, we have to look at the dual-engine operational model Ondas has built. The company operates through distinct segments, combining advanced industrial wireless communications with autonomous drone systems. Their proprietary wireless technology provides high-capacity, secure, and ultra-reliable connectivity for mission-critical applications where standard networks fail completely. This tech is deeply embedded in the American rail infrastructure, helping major railroad networks automate operations and improve safety monitoring across thousands of miles of track. On the other side of the house, their drone systems provide automated field-deployable aerial intelligence for security, critical infrastructure inspection, and now high-end defense applications. This combination of proprietary data networks and autonomous hardware gives them a unique end-to-end operational advantage that pure-play drone manufacturers simply cannot match. If you look back at older reports and their financial evolution, Ondas was historically viewed as a high-risk development stage company. Their revenue in previous years was modest, often pulled down by heavy research and development expenses as they perfected their wireless platforms and autonomous drone units. For a long time, the bear case against the stock was that it burned too much cash relative to its commercial adoption rate. However, recent quarterly results shattered that narrative. The company reported record revenue growth and raised its full-year guidance significantly, driven by a surge of over $110 million in new orders within a single quarter. The legacy commercial business is finally achieving operating leverage, and when you layer the newly acquired defense revenue on top, the historical financial metrics become completely obsolete. This is no longer the pre-revenue speculation play that short sellers targeted 2 years ago. It is a scaled operating platform with $500 million in projected annual revenue. For self-investing enthusiasts managing portfolios through individual accounts, tracking these micro-cap turnarounds requires looking past basic backward-looking valuation ratios. When checking asset profiles on a Fidelity brokerage account or managing an Interactive Brokers account, standard trailing price-to-earnings metrics look skewed because they include past acquisition costs and legacy development expenses. The true forward-looking value lies in their contract backlog and accelerating defense orders. Ondas recently secured over $40 million in new defense orders across Europe and the United States, showcasing a rapidly accelerating demand curve for autonomous loitering munitions and persistent intelligence platforms. This represents long-term, sticky government revenue that remains completely insulated from broader consumer economic slowdowns or retail spending drops. Comment below how many shares of Ondas stock you currently hold, or if you're planning to add it to your watch list soon. Gathering perspective from the community helps gauge whether retail investors are finally catching on to this institutional volume shift, or if the broader public is still completely unaware of the defense tech transition. As we look toward the future outlook for the company, the coming quarters present several critical catalysts that could trigger sharp upward price movements. The integration of DZYN technologies will be fully reflected in the upcoming financial updates, giving the market its first clear look at the combined entity's true earning power. Furthermore, the company's Centric segment recently announced an official collaboration to integrate its cyber technology into major defense platforms with Tier 1 contractors like Lockheed Martin. Getting your technology embedded into the platform of a major prime defense contractor is the holy grail for a small technology firm, as it ensures decades of recurring component demand and massive scaling opportunities. If the company continues to secure these high-profile integration wins, the current sub-$8 stock price will look like a brief historical anomaly. However, an objective analysis requires balancing these massive opportunities against the inherent execution risks. Integrating an acquisition as large as DZYNE carries structural challenges, particularly around blending corporate cultures, alignment of manufacturing facilities, and managing working capital requirements. Defense contracting involves long sales cycles and strict regulatory hurdles, meaning any delay in government appropriations or testing validation can push expected revenue out by several quarters. There's also the risk of equity overhang, as the stock consideration used to finance these major buyouts eventually becomes eligible for market sale after lockup periods expire, creating temporary technical resistance on the charts. Investors building automated strategies through services like Schwab Intelligent Portfolios or managing active positions on a SoFi trading platform must carefully monitor these technical supply walls. The broader sector momentum remains incredibly supportive of the company's long-term trajectory. As large capital pools seek out pure-play autonomous defense assets, the scarcity of publicly traded options works heavily in favor of small-cap standouts. Most retail investors trying to catch these massive defense trends end up buying bloated legacy conglomerates where autonomous technology represents only a tiny fraction of overall operations. Ondas provides a concentrated hyper-growth vehicle tied directly to the modernization of global security infrastructure. This distinct positioning is exactly why the expectation of a slow commercial rollout is completely disconnected from the reality of an aggressive defense tech roll-up. The divergence between